Joe, you've been getting deep into some of these Reddit threads to look at and try to figure out what people are talking about. What are you seeing there?
You know, it just looks really fun. And I mean that really seriously in the sense that you can see the attraction, why people want to be part of this thing. It looks like people who are having an extreme amount of fun. A lot of people are making a lot of money doing it. There is a rebellion aspect to it. There's an anti-establishment aspect to it. There's a meme culture aspect to it. Memes are fun. The cool thing about memes is that the more you post them, the funnier that they get. The more GameStop goes up, the funnier the whole joke gets. It's a joke on the financial system. It takes 2 seconds to see why if someone had some extra cash and access to a Robinhood account, which takes a few minutes to sign up for, there's no mystery at all why people are wanting to join on the side of a trade.
Okay, but for some people who've lost a lot of money, it is not a joke. I actually got some comments from Ellen Powell, the former CEO of Reddit, who said, "We've seen social media manipulate traditional media and politics. Now we're seeing it manipulate the markets. It's amazing to see the power of market manipulation move to the masses. I'm not investing in it, but I do think it means significant changes in how the investment world works, and I hope that means more decentralization of power, access, and wealth." Anthony, would you call it market manipulation?
I wouldn't call it market manipulation. I think this is where the SEC has to be careful, because if you're reading a blog like Joe just pointed out, and you've decided as a micro investor to individually go out and stake Bitcoin, if you're telling me there's 15,000 people on the phone together and they're colluding, that is a different story. But if you're telling me, okay, I've read this blog, I'm now making a decision as an individual investor to buy, sell, or hold GameStop, I think that's totally legitimate. And what I would question my fellow hedge fund managers and the establishment about is those are the rules. And so play inside the rules and play inside the context of those rules. All of a sudden, it seems like people want a rule change because of the phenomena that's taking place right now. So I don't necessarily think that's fair. I think that the thing I would ask for is symmetry in the rules. I don't see price collusive activity as much as I see individuals acting, and they happen to be acting contemporaneously, but it's not something that's preordained or premeditated.
Joe, tell us a little bit more about who these individuals are.
You know, look, I think it is a range of people. I think probably they skew young. They're people with extra cash. Maybe, you know, you have this phenomenon where a lot of people have compiled excess savings this year because they haven't been going out. They haven't been spending. Maybe they were the recipients of stimulus money. But I think, look, a lot of people in the last several days have received, especially in this industry, especially anyone who talks about markets, has probably received a text from someone in the last few days who is not in finance, who's like, what's going on with GameStop? Or two people last night texting me and saying they bought calls in AMC. I think, like I said, there's a fascination element. And to this question about like market manipulation, you know, I remember for years, a lot of hedge funds would do these big like 200-page slide decks at these sort of charity events and other things where if you got exclusive access to it, and they would announce their trade, either short or long, and the stock would instantly move. The way, like, moving the market by your public statements has been a thing forever, and I do think that social media, Reddit in particular, has created the ability for people without much buying power individually to sort of replicate some of that phenomenon.
So speaking of the rules, Anthony, I wonder if the danger to going short is making going long riskier because you can't hedge.
Well, I mean, yes and no. I mean, I think at the end of the day, you could see this happening on the short side as well. So I think people need to be careful being too absolute in terms of direction and what they're saying. But look, short selling has been a tricky, nefarious part of our business forever. I think it's interesting that Elon Musk got himself involved because he has been on the other side of the short selling, specifically from Melvin Capital. So, you know, you're going to have this tug. It is a establishment, anti-establishment tug But I don't want people to make the mistake of thinking that it's only going to be longs going against shorts. It could be shorts also going against longs. And I'm going to say something weird that people either get or won't get. This type of decentralization, weirdly, there's a wisdom to the crowd, and weirdly, it will cause more checks and balances in the system. In the same way, I believe as Bitcoin becomes more accepted, it will put a check on central bankers.
Now, Elon, with a single tweet, Elon Musk, and the word GameStonk, we saw another huge move in the stock. Joe, the blame game is happening here. I mean, do you think the Fed bears some responsibility for what we're seeing?
No, I don't really think so. I mean, look, manias, exuberances, all kinds of things happen in all kinds of different monetary policy conditions. We saw it in the late 90s. Similar activity when interest rates were at 4%, real interest rates were much higher. These things happen. Wild things happen in markets. Humans are weird animals that move in packs from time to time. And look, to some extent, perhaps the fact that the policymakers lean so hard against the downturn has given people that jolt of confidence. But again, even to the extent that the Fed, there is a Fed element, ultimately we're not talking about huge amounts of dollars here. These are like small companies. We saw the overall index levels not particularly active over the last several days. So I think, sort of human nature, animal spirits are probably a much more important factor. Whatever the sort of perfect storm that's come together between people having more cash, the new tools to buy options without any commission, the rise of social media, some things just come together and people do weird stuff. And I think Powell had a good line where if you try too hard to connect the dots between asset prices and monetary policy rates, you're probably going down a dark corner that's not going to get you very far.
Anthony, you mentioned the French Revolution. Some have compared what is happening now to the Capitol riots. Would you go that far?
I wouldn't go that far. I would say the Capitol riot is really over the line. I mean, that's full-on rule breaking and full-on lawlessness and sedition. So I wouldn't go that far. But I think if you're making the point that there are elements inside the society now that are rubbing up against the establishment, whether it's in the investment world, the political world, or other realms, I think that is clearly happening. And when that happens, if you study the arc of 5,000 years of human history, when you study that arc, when those shatterings start to happen, that means that a new world order is being remade before our eyes. And so there will be different rules in the political world, and there'll be different rules in the investment world as a result of this activity. But I do think that the Capitol riots, frankly, are sedition and a form of domestic terrorism that I completely denounce. The Reddit stuff, I think I'm in Joe's camp. I find it somewhat cheeky. And even though I lost some money related to it, I think it's a little bit on the fun side.
Just out of curiosity, Anthony, do folks at Skybridge keep tabs or watch what's happening on the subreddit Wall Street Bets?
We don't. No, I mean, we probably should start doing that, but I would say by and large, we don't. No, we've got a very long-term diversified plan in our funds, and then we have a specific Bitcoin fund. And so this sort of noise and this sort of activity is not really going to disrupt that long-term fundamental philosophy. But I think to Joe's point, I think I got to go look because I think it's entertaining. I got to go look now that Joe's brought up how entertaining it is. I'm going to go check it out.
You got to check it out.
I will.
Well, do you think you should, beyond the entertainment value, do you think more sort of traditional money managers should be looking at social media and Reddit and some of these, alternative forums to see what's on people's minds?
Well, listen, if you're in a trading philosophy, if you have a hedge fund that's set up to be frequency trading or trading, the answer is absolutely yes. But if you're in a long-term zone of thinking over 3 to 5 years and you're willing to have a long-term fundamental investment approach, I think it's noise, to be candid, but it is changing the game, and it will require regulators to rethink how the game is going to be regulated.